Will the crashing price of Terra Luna take Bitcoin under $10,000? That is what everybody's talking about right now, okay? We're watching markets all around the world absolutely crater. The NASDAQ, the Bitcoin market, the S&P 500, even bonds, equity markets all around the world are crashing. And the biggest price crash of them all is this thing called a Terra Luna, which has crashed from $120 per coin to under 5 cents, all in the space of a week. Okay, guys, this thing has lost $35 billion of market cap value in the past 2 weeks alone. Okay, this is one of the largest crashes in financial history. And in this video, I'm going to break all of this down. I'm going to dispel the FUD about Michael Saylor, who's supposedly about to get liquidated if Bitcoin hits $21,000. I'm going to tell you where I think the price of Bitcoin is going to go. And most importantly, I'm going to explain what this UST stablecoin is. I'm going to explain why it depegged, and obviously how the relationship of this UST and Terra Luna works, because understanding all of this is going to be pivotal in understanding what is going to come next. So obviously in this video, I'm going to break all of this down. Let's jump straight on into it. The price of Terra Luna has crashed from $120 per coin to under 5 cents, all in the space of a week. Okay, Terra Luna has just lost $35 billion worth of value, all in the space of a week. Everybody's talking about it. Everybody's talking about the impact this is having on the wider quote-unquote cryptocurrency market cap kind of ecosystem here. But nobody's kind of talking about why or how it's caused. So we're going to try and break that one down for you guys in today's video, okay? So let's actually start to talk about how Terra Luna has this stable coin called UST, and let's talk about the relationship of how it actually works, okay? So essentially you've got two kinds of stable coins. You've got a collateralized stable coin, or you have an algorithmic stable coin, okay? So an example of a collateralized stable coin is something like a USDC or a Tether or a BUSD. The idea of how they keep that one-to-one peg with a US dollar is they're supposed to be 100% fully reserved. Obviously, Tether is not 100% fully backed, but that's a whole nother video. So in USDC's case, they have a $50 billion market cap, and they actually hold $50 billion of US treasury bills, okay? But that's kind of besides the point. That's what a collateralized stablecoin is. We want to talk about what an algorithmic stablecoin is, because that is what something like a UST is trying to do. So it tries to keep its one-to-one peg with the US dollar in a different, more kind of funky way around it, okay? So if I were to pull up this chart here, you can see that the UST stablecoin is built on the assumption that whenever new UST is made, they burn Terra Luna, okay? And when people redeem UST, or they're selling their UST to go get dollars, the way they do this is new Luna is minted, okay? So that essentially every single time that the peg or the stable coin, the UST, goes below $1, so let's say it goes to 99 cents or 98 cents, this kind of algorithmic stable coin operates on the assumption that people are going to come in, they're going to buy UST, and what that is going to do is it's going to actually it's going to burn Terra Luna, okay? Now, this obviously works vice versa as well. Every single time the price is below $1 and above $1, this mechanism is supposed to work, and it does work. When you're in a bull market, this mechanism works, because obviously as long as the total market cap of Luna is bigger than the market cap of UST, it is quote unquote kind of backed, okay? If we were to have a look at the market cap of, let's say, Terra Luna, we're going to bring this one up on screen. You can see the market cap of Terra Luna all throughout 2022 has been somewhere in that $30 billion range, okay? Now that is fine, that is healthy, that is good, that is okay for this kind of mechanism to work. So you guys can see the market cap has been increasing of Terra Luna. Now, UST's market cap has been somewhere around 10 or 12 billion dollars, and at the peak it got to about 18 billion dollars. So UST was 18 billion dollars. Luna was somewhere between 30 to 40 billion dollars. So the UST stablecoin is kind of 100% backed by the Luna. Okay, remember, this is how you get your UST and you turn it into dollars. You need Luna. How it works is if you want to redeem $100 of UST, what happens is, let's assume the price of Luna is $50 per coin. So one Luna is $50 USD, all right? And you've got $100 worth of this UST stablecoin that you want to redeem. You want to sell that and get dollars. So how the mechanism works is you take your $100 and the algorithm will give you 2 Luna, okay? If Luna's $50 each, you're getting 2 Luna, and you sell your 2 Luna and you get $100 worth of US dollars, okay? This is how you would redeem 100 UST worth of stablecoin, okay? And now this works fine in a bull market, okay? Everybody will remember that throughout 2021, the price of Luna was actually increasing, okay? It was going through a bull market, but not many people know why. Why was Luna going through an enormous bull market in 2021? Well, because there was this trade set up. There's something called Anchor Protocol. So Anchor is something that's on the Luna blockchain, and essentially it's a staking protocol where they incentivize people to come and stake their UST stablecoin. So the way it works is you stake that UST stablecoin and they gave you 18% on the stablecoin. An 18% yield, okay? So naturally, people were absolutely piling into that trade. People were like, yeah, give me some 18% yield on my UST. You can have a look at how the market cap absolutely exploded throughout 2021. So again, this is the market cap of the UST stablecoin. Look at the thing grow at the end of 2021 and the early stages of 2022. Now, while the price of Luna is increasing and the market cap of Luna is bigger than the UST stablecoin, it's all backed and it's all good. But what happens when people start pulling out of the Anchor protocol? Well, that's what happens in the early stages of May. In the early stages of May, there's $15 billion locked up in Anchor. And then all of a sudden, so you can see here, $16, $17 billion locked up in the Anchor protocol. And then this started to decrease in the early stages of May. You can see this dropped all the way down to 13 billion by May 9th. And this is what started to make that peg start to wobble. Because during the same time frame, the price of Bitcoin and all of these quote-unquote cryptocurrencies have been crashing over the past few weeks because we've been correlated to traditional markets. So let's have a look at the UST peg. You can see it start to break down in that early part of May, okay? This is when money was flowing out of the Anchor protocol, and this kind of trade started to blow up, okay? It sounds a lot like the GBTC kind of trade. But as soon as this trade started to blow up, things started to head south, okay? And obviously, when this peg first started to break, the founder of Luna, Do Kwon, he was pretty happy with himself. So the founder, Do Kwon, he actually wasn't very worried about it, this peg when it started to break, okay? He was mouthing off here on Twitter. He was taking the piss out of everyone, especially like the maximalists like myself who was saying, hey, this could be dangerous. This is causing systemic risk. Do Kwon was just, he was having all sorts of fun on Twitter. I'd encourage you to go read the tweets if you want a good laugh. And that's because the peg has broken already, okay? So the Terra Luna peg actually broke in May of 2021, and Luna dropped from $18 to $4, okay? So this is nothing new. But since then, Do Kwon did something very interesting. That is why Do Kwon created this thing called the LFG. So this is like the Luna Foundation, and this is kind of where they created their idea of treasury reserves. So since this peg broke in 2021, Luna's been out there buying Bitcoin, okay? They've been using Bitcoin to back their treasury reserves instead of relying on this really complicated Terra Luna and UST relationship, okay? Where Luna gets burned, UST gets minted. UST gets minted, Luna gets burned. They decided to add some Bitcoin into that kind of reserves. So you can see here that they had to sell their Bitcoin. So they had $1.5 billion worth of Bitcoin. Everybody was talking about that over the past couple of months. These guys were buying like $120 million of Bitcoin every single day for their reserves. But of course, when the peg started to break and Luna was also starting to break and decreasing market cap, they had to sell everything. They had to sell their Bitcoin. This is a little screenshot that I pulled from the other day, so it's a little bit dated and old. But you can see in their treasury reserve, they're holding all sorts of different things. They were holding $1.5 billion worth of Bitcoin, and that all got sold on May 7th. You can see a massive liquidation there. And they also hold other stuff like a few shitcoins like AVAX and Luna. But essentially, that's why Do Kwon initially wasn't too worried, okay? Because he thought, hey, I've got the Bitcoin to back me up, I'm all good. But guess what? Things are not all good anymore. Let's take a look at what's happening. So now everybody's running out of this UST stablecoin. They're running for the exit doors, okay? And what that's creating is everybody's redeeming the UST, okay, and that's creating a shit ton of Luna supply. So Luna is actually hyperinflating before our eyes. Here, we're going to look at the circulating supply of Luna and have a look at this. This is pretty mad. So you can actually see the circulating supply of Luna has been hanging around that $340 million mark, for the past year. Okay, the circulating supply of Luna has been chilling at around 340 million, but when everybody's redeeming those USTs, remember, that creates new Luna. So when this peg started to break, everybody got scared. Everybody tried to sell their UST, and this is creating a shit ton of Luna. It's hyperinflating. You guys can see that the supply of Luna, just in the past week, okay, 340 million on the 9th of May. On the 11th of May, that had already tripled to 1.5 billion. The very next day, it was 158 billion, okay? That is 100x in the supply of Luna in the space of one day. And then, get this, today it's even better. The supply of Luna is 6.5 trillion, okay? It is hyperinflating, and that's why the price of Luna is absolutely cratering, okay? Now that is just absolute madness, okay? And obviously all this madness has led to the Terra blockchain officially being halted again, okay? The reason they had to halt this was because they're creating a shit ton of new supply, Luna. Now, Terra Luna is a proof of stake system, so if you're creating a lot of supply and the price is really small, that means somebody can swoop in, buy up all the governance tokens, and they can change the protocol in any way they like because they have all the stake. Okay, this is why these proof of stake coins are simply can never dream of being decentralized, okay? But moving on a little bit, we can actually see Do Kwon, he was actually behind a stable coin that was created in 2018 and then obviously in 2020. So just reading from the article here, Do Kwon, the CEO of Terra, was one of the pseudo-anonymous co-founders behind the failed algorithmic stablecoin Basis Cash. Okay, so Basis Cash, this was a DeFi token that launched on Ethereum in late 2020, and of course, it failed, okay? The token of this long-abandoned project never achieved its target of dollar parity and sank below $1 in early 2021. Over the last 3 days, this is exactly what's happened to UST, his other stablecoin. So this Do Kwon looks like a little bit of a shady dude. I mean, he knows that these algorithmic stablecoins don't work, and it really does just look like a Ponzi scheme for him to get rich and dump all of his UST. But moving on again, what impact is this going to have? Lots of people are speculating, okay, who attacked this Terra, okay? Because there was actually an attack, okay? What happened was somebody bought a shit ton of Bitcoin. They dumped it really late on a Sunday night, so the price of Bitcoin crashed. This caused the Luna Foundation Guard, that's what they call their treasury, to sell their Bitcoin. And naturally, this kind of caused a price spiral. So I'm not going to speculate. I'm just going to say, look, that opinion is out there. And a lot of people, myself included, say, okay, this was a coordinated attack so that the Fed can step in and do something very interesting that I'm going to get to in a minute. So what we've seen is Janet Yellen, okay, she's the head of the Treasury, comes out and say, hey, look, we need to regulate stable coins, okay? So I think their plan is to back all of these stable coins with US Treasury debt. You mandate these stable coins to back themselves with US Treasuries. Remember, this is exactly what USDC has done, okay? They've got a $50 billion market cap and they're 100% backed by US Treasuries, okay? Very, very interesting. And a lot of people are saying, hey, look, the petrodollar system is breaking down. Nobody wants to buy US debt anymore, okay? We've seen it all around the world. Russia has completely de-dollarized their economy since 2014. China has stopped buying US treasuries in 2014 and they've kind of plateaued their buying. And now, obviously, Saudi Arabia has recently come out and said, hey, look, you guys, we're not going to sell our oil in US dollars anymore. We're going to say F you to the 50-year petrodollar system. You can pay us in Chinese yuan or Russian rubles. So everybody's saying, who's going to buy US debt? Well, I say the stable coins are going to be mandated to buy the US debt. And I actually think this is going to prolong the hegemony of the US global reserve currency status. But that's for a whole nother video. I'm going to talk about that one in a different video. You can see here, I thought this was a pretty interesting tweet. It kind of compared the size of the Terra Luna Ponzi to the famous Bernie Madoff scheme. Okay, the Bernie Madoff scheme was something like $50 billion from memory. There's a nice little tweet here that hopefully tells us. Okay, the Ponzi scheme was worth $64 billion. Luna was worth, what was it, $40 billion from earlier in the video. We checked that out. So this is massive. This is one of the largest Ponzi schemes and financial crashes in human history. Massive, okay? Just that tweet kind of puts things into perspective. Now, let's transition into the crashing Bitcoin price and Michael Saylor. Everybody's talking about, oh no, if the price of Bitcoin goes to $21,000, Michael Saylor's going to have to sell his stack. That's what everybody is talking about, okay? But Michael Saylor came out and he clarified. He said, hey, look, yes, MicroStrategy owns 115,000 Bitcoin and it's like $4 to $5 billion worth, but most of that is bought and held in a different, safer kind of way than the most recent loan he took on, okay? So MicroStrategy took on a $205 million term loan where they used Bitcoin as the collateral for that loan, okay? He only did this with $200 million. He didn't do this with his whole $4 or $5 billion stack of Bitcoin. That's where his 115,000 Bitcoin is. That's held up in a much safer kind of trade that we can get into explaining in another video. He essentially said, he only gets liquidated, the price of Bitcoin goes to $3,500, okay? So the fears over Michael Saylor being liquidated, they're a little bit overblown in my opinion. And I thought this was interesting as well. Breaking news, Michael Saylor announces that the Financial Accounting Standards Board, the FASB, has voted to change their accounting tricks, okay? So I think the timing of this announcement and the change in the accounting requirements of the FASB, the FASB, I think it's very interesting because this has actually been very onerous for public corporations in holding their Bitcoin. Essentially, the long and the short of it is whenever the price of Bitcoin fluctuates and it dips, in a quarter by quarter basis, what happens is your Bitcoin position is marked based upon the very lowest price that Bitcoin trades in that quarter. So obviously your Bitcoin holdings, it's not gonna actually show the true value of your Bitcoin holdings because it's marked to the lowest price that Bitcoin trades in a quarter. So when these public corporations do their quarterly returns, holding Bitcoin on the balance sheet, it can make it look as if the company's not as profitable as it actually is because the Bitcoin that's on their treasury gets marked to the lowest possible price, okay? That, again, we could do a whole nother video on that alone, but let's kind of transition on out of this one. Let's also have a look at Tether on the way out. I'm just saying, I'm keeping an eye on Tether because look at the volatility start to increase over the past few days. Are people starting to get a little bit worried of Tether? I'm not so sure. We know that they're not 100% backed, but again, we'll probably talk about that one in another video. Now, what's my takeaways that you guys can kind of learn and take away from this video? even a blue chip cryptocurrency like Luna, okay? It was a $40 billion market cap. You had all these experts like Raoul Pol and Mike Novogratz talk about how it's this beautiful, revolutionary, algorithmic stablecoin. But guess what? It's not. It's centralized. It's a piece of shit. It doesn't work. And I think this is just another kind of reflection that all of these 12 to 15,000 cryptocurrencies, if they're not decentralized and if they have a flaw, somebody will exploit that flaw and they will attack them for financial gain. And that's why I have the belief that in 5 to 10 years, in the future, I think Bitcoin's going to be the only thing left standing, because it's the only thing that can withstand a nation-state level attack, and that is very, very important. There's 200,000 Bitcoin nodes all around the world running the Bitcoin code and checking the Bitcoin rules and verifying Bitcoin transactions and having a quote-unquote vote on the Bitcoin network. And obviously, these stable coins don't have that kind of decentralization. So takeaway number one, Bitcoin is the king. Bitcoin is the big daddy. That's why I'm a Bitcoin maximalist, okay? Takeaway number two, just be careful out there, okay? Even a lot of Bitcoiners that I know are Bitcoin maximalists, and they're leveraged. And the recent price correction has it required them to post more collateral on their Bitcoin loans. So don't leverage yourself. Be safe, stack sats, get your Bitcoin off exchanges, put it into a hardware wallet like the Bitbox O2, which is of course today's sponsor for this little episode. Go get a Bitbox O2, it's a Bitcoin only hardware wallet, and you can store your Bitcoin safely. Easiest hardware wallet I've ever used. But I think that's going to round up this video. I'm going to probably be doing more and more of these kind of educational style videos talking about the news in the Bitcoin space. So if you liked it, feel free to like the video, feel free to subscribe to the channel. It helps the channel out, and you guys get notified when I do another one of these kind of economic ramblings. That's what I call them anyway. So have a good day, and I'll see you guys in the next video.